Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the small caps. We'll take a look at some of the small caps that were in play today. So the big winner was AETI, ticker symbol AETI, closed up 126% today. It did trade at much higher levels. It was able to run above 250. As you can see, that was the high up here, and then it pulled all the way back, forming this long upper wick. You can see they were selling shares, dumping after that big run up. It did close below the January high close level at 180. That's going to be the big level to break tomorrow. If it fails to get above that 180 resistance zone, what you want to see is that blue line there, the 300-day simple moving average at 147 hold. If it was to drop below, you have the 200-day simple moving average, and then the upper Bollinger Band's way down here at 122. So failure to break 180, and the candles could work their way back into the bands. Check out that giant volume spike today. A break above 180 would be bullish. Now, if you look at the weekly chart here for AETI, each candle on this chart represents 1 week of trading. You could see this week it broke above the dotted purple line, which is the middle Bollinger Band at 108. It got above the 50-week moving average, which is at 141, the green line, and then it was temporarily above the gold line, which is the 100-week moving average, currently at 171. That's going to be the key level to break. If it struggles with that 171 level, the candles could pull back down here and test this 50-week moving average at 141. That's the big level to close above. You want to see a weekly close above both of these levels would be most bullish. And then if that happened, then you're looking for a break above this 2017 high close, which is just below 220. You can see here there was this channel, and right now it's trying to bust through the top of the channel through descending resistance. So it would be really bullish if it could stay above 160 for the week. If you look at the AETI 15-minute chart, each candle on this chart represents 15 minutes of trading. This is just a 3-day chart. This is what we are working on in the chat today, and you can see it was riding EMA 4 support higher. It did get below temporarily, but it pulled back above. And then finally on this candle right here, this was your signal the chart was breaking down. When it formed this horizontal resistance line here at this 245 resistance zone, that was a signal that it was topping out. It needed to get above this high close here at 145, and so breaking down here at 230 was your signal. Okay, I'm going to lock in these high of day gains. If you weren't able to lock them in between this 220 and 245 level, when the middle Bollinger Band broke on these next two candles, that was your signal the chart was breaking down. And as you could see why it's important to exit for these parabolic runners if you're a trader, if you're looking at this as a short-term trade, because look at the big pullback. It ended up dropping all the way down to 167. So getting up here, in the 220 to 240 range was the good call. Right now, if you did exit, now you're set up for a potential rebound off of support. The big level now is the 50 simple moving average at 143. It needs to hold that level. If it comes down there, test that level, you could see a technical bounce. It has to get back above the middle Bollinger Band at 214 to get a new uptrend going on the 15-minute chart. Okay, let's look at AVXL. Closed up 31% today. That was a huge move. This has been on a big, strong uptrend. The middle Bollinger Band broke back here in May on this candle, and you can see it got above the 50-day simple moving average, the green line, above the 100-day simple moving average, the gold line, and then today it got above the red line, the 200-day simple moving average at 232. That's the key level to turn into support. Today's candle did did close well above that upper Bollinger Band, way down here at 317 or so. Let's see, the upper Bollinger Band's at 328. You could see the candles work their way back down into the bands. Going forward, if it can get above this blue line, the 300-day simple moving average at 401, that would signal it wants to head higher. It has to close above that level and turn it into support. If it fails to, you could see that 200-day simple moving average tested. Check out that huge volume spike. So that was a big move for AVXL. Check out HTGM. This closed up nearly 6%. Now this is on a nice multi-day run. As you can see here, look at all the green volume bars in a row. It's been very light volume, but it's up 7 days in a row. Today it was closed above that 100-day simple moving average at 399. That's the gold line right there. And so if it could stay above $4, that would be very bullish. It's also right here at the high close level. currently at the top of this high close here on this April candle. And so if it could stay above this $4 level, that would be very bullish. What you want to see is it working its way back up to that previous high up there at 560. Now, if it were to drop back below that 100-day simple moving average, that would be, or below $4, that would be a signal that it's still in this sideways channel that had been trading in before. As you can see, it was in this channel, and it's trying to bust out of the top of the channel. So you have the top of the channel right here, and the bottom of the channel down here, and so now it's trying to break out of the top of the channel. So it'll be really bullish if it can stay above $4. Okay, take a look at AKER. Closed up nearly 9% today. Nice move. It's heating up slowly. It came down here and bounced off of support. And then right now it's working on this key resistance zone. You have the EMA 13, the orange line, the middle Bollinger Band, and the 100-day simple moving average all lined up right here. If you see it trading above 52, it could run up here, and then you've got the 50 and 200-day simple moving averages between 57 and 61. It needs to turn that red line, that 200-day simple moving average into support to head higher. Keep an eye on it. It's making higher lows and higher highs since the low down here on the 30th, and so if it can get above this middle Bollinger Band and the 100-day simple moving average, it could keep moving. We'll see if it can break resistance. If it were to drop below that EMA 4 at 466, that would make it a risk to hold. Okay, let's look at OHRP. Closed up 4% today. So yeah, so this one is got what was interesting on this chart was the close above the green line, which is the 50-day simple moving average at 217, basically 2.2 there. If we can stay above that level, that would be bullish. You can see all these candles here were trying to break that level, and they were failing. And so closing above today should be the signal that it wants to head higher. The 100-day simple moving average at 252 is the target if it stays above that green line. If it were to drop below the green line, that would be a signal that it's not ready to go. It did close above that middle Bollinger Band on Friday, currently at 204, which was your clue that the chart was heating up. There's a possible new uptrend starting if the middle Bollinger Band and the 50-day simple moving average turn into support. Okay, take a look at SID. This is a small cap steel stock, and so yeah, it's looking interesting here on the close above the middle Bollinger Band. If it can stay above 237, that's the dotted purple line here, it could possibly get a new uptrend going. The next target's this 50-day simple moving average at 248. You can see here in May it was able to run up to that 300-day simple moving average at 260. So that's been the top level, and so if this can stay above this 237 level, you might see a run up there to 260. Just above that is the 50 and 100-day simple moving averages. It would have to turn that 276 level into support to break out higher. It did fill the gap between low of day on this candle and high of day on this candle. As you can see, there was the gap down open. That gap is now filled. Now there is an unfilled gap between high of day on Friday and low of day today. Okay, take a look at JAGX, closed up 9% today. They just had a reverse split. You could see there was a lot of action on Friday on the reverse split today. It ran up to that 200-day simple moving average. It ran all the way down into the 150s. It closed, or in the 180s. Just all this crazy action. And then today it kind of stabilized. It had a much tighter trading range, and it did close above EMA 4 for the first time since the 21st of May. That's the pink line currently at 198. It needs to stay above that level, get above EMA 13 at 212. That's the orange line, and then get above this middle Bollinger Band at 224. As you can see here, all these candles here were trying to break the middle Bollinger Band, and they were failing. They're trying to get above this dotted purple line. That failed. These failed. The middle Bollinger Band support level broke on this red candle here. You can see the candles were trading above the dotted purple line, and then when they got below, it really got the downtrend going. So going forward, if you watch JAGX and you see it close above 224, that's going to be your clue that the chart is heating up and it could possibly head higher. There was a big volume spike on Friday. It will be a risk to hold if it closes below EMA 4. Keep an eye on GERN. Okay, this is a stock that had a good run a couple weeks ago, and it did pull back last week. As you can see, it's on 5 red candles in a row, and then today it had that long lower wick on today's candle. So there was loading off of low of day. I don't have the 15-minute chart here, but we were discussing the stock in the chat today, and yeah, it was setting up on the 15-minute chart. We're looking for a breakup of that middle Bollinger Band and then possibly run up to the 50 simple moving average on the 15-minute chart. Here on the daily chart, you can see they drove it right back up above that middle Bollinger Band at 392. That's your clue that this uptrend is still intact. That is the this is the load zone as long as support holds. Now, if it were to close below 392 and the middle Bollinger Band turn into resistance, that would signal downside risk, and you can see it drop down to this 100-day simple moving average at 327. If it gets above the green line there, that's the 50-day simple moving average at 397. If you see it's trading above $4 and then it closes back above the EMAs 4, 8, and 13 again and gets above this 414 level, it could get moving. You'd be looking for a move back up to test that 485 high close resistance level. So it's really important that it gets a bounce. Keep an eye on it. Take a look at RIOT. This is a blockchain stock, closed up nearly 5% today. It's hitting the middle Bollinger Band, currently at 775. And so if it can close above that level, you can see the upper wick in today's candle. It was trading above that level intraday, but they didn't let it close above. If they do let it close above, then it could run up here to the 300-day simple moving average at 837. It failed to break that level, and that'll signal it's not ready to go. You can see on Friday it closed above the 50-day simple moving average and EMA4, the pink and green lines. That's a signal the chart's heating up. It just has to get above that middle Bollinger Band. If it could get above that blue line like it did right here, you can see it ran nearly up to 980. So there's some good upside potential if that middle Bollinger Band turns into support. If it fails to, it'll signal it's not ready to go. Okay, take a look at TNTR. This is a really nasty downtrend. You can see the downtrend started back here on the 13th of March. And you can see all these candles are below the middle Bollinger Band. It tried to get above the middle Bollinger Band and failed. This is a signal, of likely dilution, bad financing, just not a good chart. But look down here on the 29th, there was a big volume spike. So as you can see here, before that break below the middle Bollinger Band, notice how that was the last time there was a big volume spike. That was they dumped here before the big drop, and so now you've got the inverse of that. You've got the load at the bottom. So this was the sell, and this looks like the buy. You always follow the volume. So big volume exited at the top, and now it looks like big volume is loading at the bottom. And today, the close above EMA4 at 47 is your clue that the chart is heating up. It has to stay above that level to remain in play. That's the first close above that level since back here in May on this white candle. If it were to close back below EMA4, it would make it a risk to hold. The next key level to break is EMA8 at 55. If it could close above that level, it could get moving. So keep an eye on that stock. And then LIVX, this is a thinly traded stock, only 172,000 shares traded today. I'm showing it to you because it did make a nice close today. It has this little uptrend going, and then it did have volume back here in May. Notice the big volume spike. So the close today does signal more upside potential. You can see here the upper Bollinger Band is pointing up. The next resistance level is the top of this white candle here, and so it could run up to $7. We'll see. It broke above resistance. This closing price here, it got above that 5 level. This has got some. We'll see. It has an uptrend going. It closed above resistance, and there's not a lot of resistance until that $7 level. We'll see if they can keep it going. This is a thinly traded stock, so be very careful. Okay, so HGSH, this is another thinly traded stock, similar kind of setup. They're walking it up on light volume. Check out how they had the volume spike back here. They loaded up, and then now they're walking it higher. There was this big pullback from this high. It had hit the high from back in January, the high close, and so it looks like it's trying to work its way back up to that level. If it can break this resistance zone here and get above this, get above this 205 level, then it could possibly work its way back up to 245. It is busting through the upper Bollinger Band today. It closed above. Last time it did that was on this candle, and a red candle followed, and it pulled back. What you want to see is EMA4 at 176 hold. As long as that level's holding, the uptrend is intact. Okay, thanks for viewing this small cap video. Come check out the chat. I'll post the link below the video. Thank you.